What's up, guys? So I wanted to make a update video again. Obviously, I told you guys that I was buying the dip right here. Reason why is I listened to my systematic models. So this is the DCA SMART model that I give access for free. By the way, link down in the description. And yeah, you can see that you can basically play with this indicator, and there's different mode for the type of investor you want to be. And I like to use it on the weekly time frame. And using the aggressive investor style, basically you could see that it started flashing buy signals at the lows. So I have been buying. I've been slowly dollar cost averaging. I'm going to show you guys how I do that as well. But before, just want to tell you guys, it's the election in Canada, right? So I think it's important. Go vote. By the way, the polls are lying right now. The polls are not correct. It's neck and neck. Right now, it's pretty crazy. After 10 years of insanity, that it's basically neck and neck. It's 50-50. So then it's really going to depend on the type of ridings the parties win and then the amount of seats they get in the parliament, if I'm not mistaken. I'm not an expert in this, but when it's neck and neck, go vote, guys. Personally, I'm voting conservative this time. I voted liberal. I want to say that out loud. I've had enough. And honestly, I just looked at the plan of Mark Carney. It's complete garbage. Excuse my language. What the beep? You can tell that he was the economic advisor of Justin Trudeau. You can clearly tell with the insane deficit again, money printing, no economic growth, just more socialist program. Sorry if I'm going on a rant. It's just, it doesn't work, and the only thing that's going to happen is we're going to have more debt. The Canadian dollar is going to go down. We're going to export less, more regulation, more big daddy government socialist crap. It doesn't work. It just shits on the youth and the young generation. So I just wanted to say that out loud. This is not me being in a political religion. I think that's one of the problem in our country, in Canada. If the Liberal had a good plan, they were gonna make the Canadian dollar stronger. So you and I, we could go on vacation and enjoy time and pay less taxes. I would vote Liberal. The problem, it's the complete opposite. So this is why I urge you guys to, go vote Conservative. It's basically another Justin Trudeau. And I'm sorry to say this, I was very open-minded with Mark Carney, but I'm very disappointed, to be quite honest. Very disappointed. And if he wins, honestly, Canada's going to have another 4 year of complete economic shit. So a lot of people seem to want to vote for that. So that's just my 2 cents. I want to go on a little rampage here. Now I digress. You do you. I believe in liberty, but at least go vote. All right. So now that I got that out of the way, you're probably not even listening anymore because you're like, what the F? This guy, like, he's just going on a rampage. Anyways, so right now I'm going to put the candlesticks for you guys. I'm going to show you guys the weekly time frame for the S&P 500, right? And the DCA SMART indicator on aggressive mode that you can have access completely for free. You just have to click the link below. It's a Wix form. You just give me your TradingView username. By the way, for TradingView, keep a free account. You don't need to pay for the premium account. Just open a free account. Then you're going to have a TradingView username right here. I think, yeah, right here. Mine is Coyote19. And then, you give me that, and then I'll give you access for free. So that's how it works. If you were wondering, if you have any questions, ask down below in the comments. There's a reason why I give this away, because I cannot make videos every time I'm dollar cost averaging in the market. So this is why I give this for free to all of you guys, so you can, manage your money and, buy systematically with no emotions. And that's how you need to process the market if you want to make long-term big amounts of money. Because a lot of people have panicked. They sold out, right? Which is completely dumb, right? And if you had this system, you would have been buying the dip with me. Of course, I'm not going all in yet, all right? The reason why my risk on, risk off model is telling me that we're still in a risk off environment, and my bear market model is still to the downside. So that's why I'm being cautious. But I just wanted to show you guys that, yes, I have been buying. I told you guys since the beginning of this month, if I'm not mistaken, I made a video called I started buying the effing dip. But I do think that eventually this will be sold off again. I'm still bearish technically, bigger picture. Now I'm just going to put the smart layer model. And so basically, in my humble opinion, I still think there's a high probability that we go to my second target for this bear market, which is 455, 450, that ballpark for the S&P 500. So that from now, because we obviously had a very good week, that would basically mean about 16% to the downside from obviously the bounce that we just had. From the lows, it's not that low, right? It's only 7%. So it's not that low compared to, where we were like 2 weeks ago when I told you guys I was starting to buy, to nibble a little bit with small size. And I want to be clear, I did not go all in yet, but I did add in the past few days when we had the big drops, days where we were down 3%, another day we were down 6%. I did buy, but I can't make videos every time, obviously, and I don't manage your money, and it's not financial advice. It's for educational purpose. That's why I give access for free to these indicators to you guys. Obviously, there's other models I can't give you access for now, but these are the ones that matter if you want to make long-term gains for a long-term retirement accounts, if that makes sense. And you can see that if I zoom out, you know, every time the green arrows were triggered, right? It was an amazing buying opportunity if you just held for 6 to 9 months into the future. So that's why you need to have these type of systematic indicators that just help you buy the dip and takes away all the emotions. I wanted to now switch gear to what's the fair value of the S&P 500. All right, so going on the monthly time frame and using the LRC SMART, you can see that basically now we're no longer undervalued on the S&P 500. We basically gained back more than half of the loss already, right, in 2 weeks. In my humble opinion, I think it's going to be a dead cat bounce. I would be cautious. This is why I'm not FOMOing back right now. I bought, I'm up. I mean, I bought pretty close to the low, so I'm happy with that. But, I'm not all in, if that makes sense. So hopefully that helps. But I could be wrong. So this is why it's for educational purpose. And for me, it's always about risk reward. So right now, the fair value of the S&P 500 is 544. So let's say, 540, like in that ballpark, right? And right now, we're above it. So if you're buying right now, yes, you are buying, at a discount compared to the all-time high of about 10%. But based on the real fair value, you're no longer buying a bargain, if that makes sense. So that's why I was also buying right here when we were at that first standard deviation, and I kept buying below 520 in long-term portfolios, you know, um, where I'm not day trading, I'm not using options, I'm just buying ATFs of the S&P 500 in long-term accounts. So hopefully that helps. It gives you guys kind of like, an idea if it's a good time right now to chase. We could still go higher. That's what I wanted to discuss in this video. I want to afterwards finish with short term. All right, so going back to short term for the S&P 500, right? So I'm on the daily time frame now. I just wanted to show you guys that we're right here right now. We're at 547, right? So when I made the video telling you guys that I started buying the dip, we were like in this ballpark right here. I added also during that day when we had this big sell-off, I added here as well. Right now, I am not adding more. So I just want to be clear, I am not FOMOing back in with the rest of my cash. I'm very happy with the cash I have. I believe it's going to be a dead cat bounce. Also, if you look at the market structure of the daily time frame, it's negative, right? You can see that we're in a downtrend. And right now, we're a little bit above the means, which is the target I told you guys we could go to in the near future. And now, obviously, we could go to that first standard deviation right here, which is 560. We could even go to that second standard deviation, which is about 578, so 580 on the S&P 500. In my humble opinion, if we go to these levels, I believe that we will get rejected at one point. I could be wrong, but until my risk on, risk off system tell me that we're back in a risk on environment, I'm going to be very slow and very patient at buying the dip, and I just wait for the market to come to levels I'm comfortable buying, and that's exactly what I've been doing for the past couple of weeks. And this is why I show all these levels, so at least you guys can kind of see on my charts the levels where you can buy, and I give access to some of these indicators for free. So don't forget that link down below. They're very accurate, and then eventually if I am correct, I do believe we could go to that second target of mine for the bear market. All right. I don't think we're going to stay there very long. I'm going to be very honest about that. This is why, for me, it was worth it to buy here a little bit. I explained why in the video I made. I started buying the effing dip to just share my thoughts and my thought process. And hopefully it can help some of you guys, when you see these big drops and you're like, oh my God, I don't know what to do, right? Well, you got to have a systematic approach, and it's all based on risk reward. But right now, above the fair value of the S&P 500 for me, and then on the fundamental side, did anything change? Not really. Tariffs are not going very well, by the way. Last time the US and Canada and Mexico did the new treaty, right? And when was it? 2017, 2018, if I'm not mistaken, something like that during the first term of President Trump. It took like 7, 8 months for that, new tariff alliance, USMCA, something like that, to get finalized. And right now, the White House is trying to do that with like 100 countries. So if they are serious about continuing with the tariffs, right? And I'm not here saying if it's a good thing or bad thing, but if you think it's just gonna be done in 2 weeks, not really. If it is, that means it failed, and that means that President Trump folded, and he was not able to get deals for Americans, and that it was a complete flop, because there is no way in hell that you're gonna negotiate tariffs with another nation and be able to cut a deal in just a couple of weeks. It's extremely complicated. It's a touchy subject. There's a lot of component in the economy. It's very complicated. It takes, 2, 3, 4 months minimum, you know, even if they speed it up compared to the USMCA agreement they did during the last term, right? So that's still on the horizon. Obviously, you can tell that Donald Trump has a put. So there is a Trump put on the market. And when the market is down 20%, President Trump does not like that. So that's why, as well, if you have noticed, he's been pretty quiet for the past couple of weeks, hasn't he? He's been extremely quiet, and he backtracked a lot of the crazy stuff he was talking about. And right now, a lot of people in the Trump administration are very quiet. And I think they're waiting for the market to bounce a little bit higher before they start bringing back again the tariff conflicts. And then most likely, the market is going to realize, oh crap, like, the problem is still there. Nothing has changed. And actually, China is not willing to cooperate. And this could last until year end, right? And then interest rate, second thing I told you guys to watch for, the US 10-year Treasury yield, which is very important because the US Treasury, right? So the US government needs to refinance trillions of dollars at the end of this year at extremely high interest rate. That again has not changed. We're back above 4%. So nothing really changed, honestly. Just sentiment right now, based on risk assets. Things are bouncing after everyone basically panicked and capitulated. But I do think that this will end up being a fake out. I could be wrong. And if I am, I'll let you guys know. My system will tell me like, hey, we're back in a risk on environment, get back bullish, take on more risk, be more aggressive. Until then, I'm still going to continue focusing on base hits, doing, small trades, small gains with options. And now I'm going to show you guys basically how I enter with options, right? So I use the 4 hour. It's very simple. I use the same type of system. I use standard deviation on the 4 hour for the S&P 500. And right now you can see that we're basically at a second standard deviation. And, obviously I'm not going to chase at a second standard deviation on the 4 hour. I was, buying with like an average in that ballpark. So, I'm cool with that. It was basically my game plan. My first target for the bear market was 512. We got that. That's when I start, buying if the DCA SMART systematic indicator tells me to start buying. So that's what I did. And yeah, if you trade like that, you will make a lot of money, and it's just gonna keep you away from losing money. And that's what's most important. And right now, obviously I'm not gonna chase at these levels. I already started buying. I bought some Tesla also at 225. Like I said, I cannot make videos every time I buy things, right? Because I'm pretty active I try to do this for educational purpose, and I give access to some of my models. But I do think that afterwards, we will at one point hit my second target for the bear market, which again is 455, 450 in that ballpark for the S&P 500. But before that, we can have a monster rally. We could even rally right back to the 200 moving average right here before, going right back down once the market figures out, oh crap, yeah, like nothing actually changed, right? Short term, yes, we could continue a little bit higher, and every dip, in my humble opinion, for short term trading will be by the dip environment until we go back, into the a second leg to the downside, bigger picture. So be careful, don't FOMO. I've been pretty good at the timing all this crap, not perfect at all. Some things happen way quicker than I even expected myself, even though all my levels were correct. Um, but yeah, so hopefully that helps. Very tricky market, by the way. For me personally, it's all about the fair value for long-term portfolio. What is the fair value of what I'm buying, right? So if it's between 540 and 550 for the SPY, I mean, you're right here. It's not a bad thing to buy if you really don't care. But if you want to optimize your entry like me, I'm not going to buy these levels. So hopefully that makes sense. So that's pretty much it. Then maybe if you want Bitcoin as well, I told you guys that there would be a big move, right? So it happened. I missed it. I did not take a trade. Reason why, on the weekly time frame, my models did not tell me to take a trade. That's it. So I do not take a trade. And right now on the daily time frame, obviously, if you want, you can chase a third standard deviation. I don't do that. That's why I stay solvent and I don't lose money in the market. I could be wrong. We could push almost to 100,000 before going back down. But that's not the point, right? When you're trading, you always need to trade based on probabilities. Right now, if you're buying here at this level, the risk reward is 0.61. That's horrible. That's less than one. So if you bet $1 and you're correct, you'll only make 61 cents per $1 you bet, which is terrible. When you bet $1 in the market, especially with risk assets, you obviously want to have a return that's higher than the $1 you are betting on the table. If you went to the casino, as an example. And right now, the means is the blue line right here. It's 15% lower. And the second standard deviation, which is 70K, is 24.7% lower from where we are. So this is why personally I'm not interested yet. But if my models tell me to long Bitcoin, I'll let you guys know. But yes, the price did pump, but my models did not give me a buy signal. So hopefully that makes sense. Personally, I'm still bearish. Also, just wanted to be very transparent, even though I told you guys I was expecting big rips, big moves to the upside as well. So it's very tricky. Trading bear markets is exhausting. Honestly, that's why having a lot of cash and going on vacation tends to be the best thing you can do. So on that note, I'm gonna let you guys have a beautiful day. So hopefully it helps. Not a lot of trades right now. I already took the trades I wanted to take, buying long term in indexes and in few names, as I mentioned. And right now, I am just waiting for a pullback minimum on the short term for short-term accounts. Long-term, I'm still waiting, right? We need to be below the fair value. So hopefully that makes sense. And I need the DCA SMART model to give me buy signals as well on indexes. All right. Catch you in the next video, guys. Stay blessed. God bless you. And go vote. Go vote. If you're in Canada, go vote. Please vote. Even if, you vote liberal, it's okay. I'll forgive you. I will forgive you. But Christ's sake, man, at least if you're gonna vote for someone, I recommend one recommendation I would say is just at least look at the platforms they just shown, right? Look at the platform of the conservative, look at the platform of the liberals, right? Like try to use your brain at least. Don't just go blindly voting like a sheep. That's it. That's my recommendation, my 2 cents. Not financial advice, not advice neither. You have the right to do whatever you want, and yeah, hope at least it's going to be done. So afterwards, we'll know if we have 4 years of economic crap again, or if we start stabilizing again. All right, catch you in the next video.